One of our members is participating remotely due to the fact that they are more than 20 miles away and cannot attend in person. The first item we have on our agenda is public participation. Does anybody from the public wish to comment this time? Seeing nobody, and I'm continuing to echo, and I think that's my problem. Okay. We're going to move on to a discussion of the tax assessment, residential and corporate, and then we're going to turn things over to Brian McMullen.
Thank you, Madam Chair and members of the FinCom. So just to kind of give you a quick overview of tonight's particular part on the annual tax rate setting process, or the tax assessment versus residential versus corporate. A lot of the details in those numbers are going to be held at a public hearing on December 6th, which is the annual tax rate setting with the Select Board and the Board of Assessors. So in that particular hearing, we'll be discussing the final numbers. I think it's important that we wait until we actually have certified values from the State Department of Revenue. We know what real numbers we're working with. And I'll get into a little bit of that process during this presentation. Just another announcement, which I think is very important for folks to hear and understand, is on November 17th at 1 p.m., my administrative assistant and myself will be going down to the Senior Center and doing an annual property tax primer on different ways you can mitigate your tax bill through various programs. We have programs for certain veterans, for seniors, for the blind, those with disabilities, and so on and so forth. And one of the highlights, I think, and you'll see this in John's annual budget presentation, is the historical number of abatements and the amount, exemptions, and the number of dollars associated with that. And if you look at this chart here, there's been a significant increase in those exemptions over the years, and we've had very generous programs and people taking advantage of it. I think we have more of an opportunity to publicize that and get the word out. I think it's important that just people in general understand what these programs are and who may be eligible and how you can apply for them. And so that presentation with the seniors on the 17th, I think, is a critical presentation for seniors to attend, and anybody that just has a general interest and wants to know more about the programs, and they can pass the word along. We're doing it earlier this year, and I think once the tax bills hit the street, and we'll go out and do it again, because most of these exemptions you have to file by April 1st next year, so there's plenty of time. There's no need to rush. But again, I just want to publicize it. I think it's important. There's a lot of programs and a lot of variables, and I do this kind of a cheat sheet, just a quick summary rundown of how you can be eligible. You got to be a certain age, there's certain income restrictions in some, there's certain asset restrictions, and some there are none. You're at the complete discretion of the Board of Assessors. But I think it's important that people at least discuss it, talk about it, become aware of them, and realize that these programs are out there. On our webpage, the Assessors webpage, we also have some detailed information there that I think is very helpful. So I think that's important that we continue to put the good word out in the street, that we've been pretty aggressive in highlighting these programs, as this chart shows. And right now, I think for fiscal 21, we're about the same level as fiscal 20, over $600,000 in tax relief in various programs. So that's a significant amount of money. So the Board of Assessors and the town, I have to say in general, have been very good to our seniors. And I think they need to be mindful of that and take advantage of that program.
Brian, sorry to interrupt you. Did you say 1 p.m. on the 17th?
1 p.m. on the 17th. So, some of the highlights of the property tax setting process, and I think it's important that folks understand, is this is all compliance with State Department of Revenue's rules and regulations. They set the rules and regulations. I follow those rules and regulations. One of the rules is these have to be arm's length transactions. What a willing buyer would pay a willing seller in an open market That's an arm's length transaction. That's what dictates these values. It's not the assessors don't dictate them. It's what people are buying and selling at that market rate. It's important to know that because not all transactions are open market transactions. You see a lot of transactions, you might pick up the beacon and going, wow, I can't believe this number. Look at, they got a steal on this house, or I think they way overpaid. There's other mitigating maybe circumstances outside of just a normal transaction, and we have to investigate that and thoroughly vet that out to make sure that this property hit the market and that it was an arm's length transaction. It's very critical with State Department of Revenue. They check my data, they confirm it, they verify it. And then, again, these assessments, when we talk about these assessments, they're not today's market value, even though I'm publishing the values today, but they're based on assessments that are 12 to 24 months old. So right now, for fiscal 22, I'm using calendar 2020 sales. So you're talking January of 2020, almost 24 months ago, versus December of 2020, a little less than 12 months ago. So that's the spectrum that you're dealing with. So when you're looking at your valuations today, they're usually 12 to 24 months old when you open up that first actual tax bill and you get your final tax bill to the town and you're looking at your property valuation. So it's important to keep that in mind. And again, this is compliance in State Department of Revenue's regulations. So one of our objectives when we do this, our objective is to make sure we maintain a certain level of assessment. And so, again, State Department's guidelines are 90 to 110% of market value. My objective is to maintain them at an acceptable range. And then also, there's different measures, but I have to make sure there's equity and uniformity in those assessments. And there's all sorts of measures that I use to make sure they're conforming with State Department of Revenue. They run their own analysis to make sure that those assessments are lining up with their standards. If they're not, I don't certify my values until I have them where they want them and like them. I also check them for just overall reasonableness. Does it make sense? Is it logical? Does it look correct? And they do the same thing. The results, hopefully, if I do everything right and I try to do it by the book, is consistent with current market trends. So again, when I say current, I don't mean what's happening today or yesterday, but in the time frame in which those sales are analyzed and reviewed. So again, 12 to 24 months old. Do my assessments make sense? Do they trend and follow the market? And then, does it satisfy DOR's guidelines? So when I'm all said and done and I run my sales ratio studies and I do this analysis, does it meet their minimum guidelines? That's always my objective, is to make sure it does that. So when I do this, that's the result I want. And then, again, making sure, because it's important that I keep equity and uniformity. I can't have a single-family home on the street at one end assessed for 20% higher than the identical home on the other end of the street. That's not equity, and there's no uniformity. So those measures are also looked at and tested. And that's critical in my world, consistency and uniformity. You might be wrong, but hopefully you're consistently wrong. And, that's, and I don't want to be wrong, but at least I know if there's equity and uniformity, it's easy to correct that. It's not easy to correct it when you have values all over the board, inconsistent with one particular type of home or one style of home or whatever the case may be. So that's kind of a big picture overview. As I had mentioned, December 6th is going to be a critical hearing when I have the final numbers and to discuss the shifting of the tax rate and the implications, and then basically I provide some scenarios of, a home from last year versus a home from this year, the average increase in that single-family tax bill. Also with the commercial property and industrial properties, I can kind of get a flavor of where things are going and what's happening. And then in the big picture, if the select board decides they want to shift the tax rate, what that looks like. So what does it do to a single-family residential home versus what does it do to an average commercial property or an average industrial property? And that's all presented at that hearing on December 6th. And I know it's a joint meeting, so we're looking forward to seeing you all again there. But that's really where all the action's going to be, and I think our final numbers will be done at that point, and I think that's probably, an important meeting to attend and to understand some of the mechanics of this. So that's pretty much it as far as property tax shifting and allocation of the tax levy, but more to come on December 6th.
All right, thank you. So, real quick, in the ALG plan for '23, you have a 7.3% increase, but is my understanding from the email you sent a little bit before this meeting that that may not be as high?
Yeah, those are, again, so I have to say that in full disclosure, and I was trying to be transparent, I'm seeing a lot of changes in the single-family class. I'm sure you all are. You look at your homes in your neighborhood and how much they sold for more than what they're assessed for. And so I was trying to get out in front of that and in full transparency and saying, it's not a 3%. I had a 3% in there, and I realized it's not a 3%. That's not even realistic. It's much higher than that. You're all seeing that in your neighborhoods, and you're seeing it all over town when you pick up the beacon and you're looking at the sales transaction. So that's a very preliminary, very early number, Christine. And again, I still got to look at the other classes of property, but that primary dominant class is a single family, and it's the only one that's highlighted in the ALG plan. The others aren't highlighted in there, so I want to proceed with caution, I guess is what I'm saying, and we can't jump to any conclusions at this point. It's way too early for that, and I kind of maybe did that last week a little bit. And I apologize for that. But I think once the dust settles, I think we're going to be in a good place.
Okay, and then can you also explain what you did, like you did in the ALG meeting, the ratio with the corporate tax rate and the reduction in business in town overall, and how as the balance shifts a little bit residential, it is possible even to see the corporate tax rate go down a little, which may need to be addressed.
Yeah, I mean, I won't, a lot of that will come out during that hearing on December 6th, but just kind of a big picture without getting any numbers, just so people understand the mechanics of it. So everything being equal, the operating budget, right, it's a number, it's X amount of dollars, town meeting approves an operating budget. Moving forward, if your residential sector class appreciates in market 3%, and your commercial property is stagnant and doesn't appreciate at all, and yet your total operating budget was 3%, then that burden is going to be all on the residential sector and not on the commercial sector. So in all likely, that's all going to be borne. Not necessarily the commercial sector will go down. It could in some cases, depending, again, what's happening in the market. So it's a very dynamic process, what I do, and a lot of that's going to come out in December 6th data. So there are all kinds of scenarios that can play out. And this year was kind of an unusual year where we saw a lot of accelerated increase in the residential sector. So from the beginning of the year to the end of the year, it was about a 9% difference at the beginning of the year and the tail end of the year, and we're seeing that same trend in this current year, which we're not even done yet. So that's going to play out again in the process, but not until we have final numbers. I don't think we should really have a discussion on that until we actually have the certification from the State Department of Revenue. But a lot of moving parts, and it's very dynamic.
Okay, I will start down with Steve for questions.
Hey, Brian, good to see you again.
Thank you.
So it's November 9th, I believe, and you're talking about having all your numbers by December 6th. Now, I know you well enough to know that you already have most of the numbers. So I guess clearly residential real estate in this town has been increasing dramatically. My knowledge of the commercial industrial sector isn't that broad, but I can't believe, based on the number of empty storefronts, buildings we have, that that sector has increased at all. Is that where we're heading? Are we going to wind up with a...
Yeah, I think a preliminary review of the data, Steve, is we're seeing a little bit of change in the commercial sector, but mostly it's due to like fit-ups and permits where they're taking out and doing some improvements. A couple of new construction permits for commercial properties, which helped out a little bit. The industrial sector, they tend to be smaller buildings. They tend to be like service shops and different things. There was some movement there. We saw some changes in valuation, and I think you will see a little bit of that in the final numbers. So, but I have to say that clearly the residential sector is, outpacing that other class of property, or those other classes of property.
And I know that there's alternative ways to value commercial property, one being income-based or rent-based. Are you seeing many things being valued that way? Because I have to believe that rents have got to be depressed.
So the income approach to value, well, I won't get into a lot of details, but in some of that sector, some of that market, I haven't seen any increases in many years. I've seen the rental income pretty much flat. It all depends on whether they're, trying to think outside the box a little bit and trying to get creative. Some of the sales are getting creative. I've seen a lot of recent sales transactions where a lot of funny stuff is happening. So I don't really, depending on the sector, and again, I don't want to get into the details of it, but some of it is a little bit of movement and some of it's been relatively flat, and it's been flat for many years now.
If you had to give a percentage on the residential, single-family residential valuations, as what percent of fair market value are we today, what would that be?
Yeah, so my objective today is to be at 98% of market value, and that's my primary class of property. That's within the state guidelines, anywhere from 90 to 110. So I'm at 98, and once I'm at 98, everything else has to fall within 5% of that. Again, as I had mentioned, that's one of the compliance issues with State Department of Revenue. And you'll hear more about that on December 6th, where we'll have more, numbers and final data to work with.
And one last question, if I may, Madam Chair. Where are we on the reassessment cycle? Is it the third year? Are we in the first year? Or?
We're in the first year after a revaluation. So last year was a full-blown revaluation, so a much more detailed and in-depth study of property assessments. This year is what they call an interim adjustment year. At one time, it was optional to do it, but it's mandatory now. I've been doing it since day one, as they, had us have that as an option. I did that from day one, only to mitigate major swings in valuation. So right now, the swings in valuation are year over year, as opposed to every 3 years or every 5 years.
So in any other year, we would have been in good shape, but our data is now a year old, and it's been a crazy year.
Yeah, so. I mean, this trend in the residential market seems to continue, at least through this year, and I don't see a near end to it next year, but I think we'll have to see what the Fed does with the interest rates, because that'll help mitigate some of that. And, frankly, a lot of it's lack of inventory as well. So it's putting a large demand on housing needs, and people are gobbling up property. And so I don't have to tell you this, but you're seeing a lot of people paying greater than what the MLS listing is because they're bidding them. They're not doing home inspections. They're waiving a lot of stuff. So, yeah, it's, I'm just trying to follow the market.
Okay, thank you.
I think it's a trend that in kind of like we saw back in the late 90s, 98, we saw a similar trend where things kind of skyrocketed. They were going up consistently 3 to 5% per year, which was what we've been experiencing. And all of a sudden in 98, they went up 11 to 12%. So we're almost in that same time frame. So we're seeing that same sort of trend.
Okay, Christy? Mike?
Yeah, hi, Brian. It was very interesting. It seems like there should be a concern for the households that are on fixed income that aren't planning on selling their house, could be in for a sticker shock in the years ahead. And that's why I think we have to do something to adjust that rate to what is fair, so that it just doesn't make sense that they get hit with a big tax burden just because the market is crazy. It could be I don't think it's a real estate bubble, but it's just, the housing prices have gone up in an astronomical manner. And I think that it's going to be a big surprise in their mail and the months ahead. So I think we got to work to mitigate that if we can.
No, I truly appreciate that, Mike. As you know, I work with a lot of seniors and help them walk through these programs. And so I hear it all the time, and I completely, understand what you're saying. Again, that's why I think this information and this presentation I'm doing next week is critical for people to understand it and know it and ask questions. If I could just take a quick moment just to kind of highlight one of the programs that we have that I think there is a greater opportunity out there for people to take advantage of. It just doesn't seem to be taking a lot of traction. It did at first, but we have a Clause 18 application, which is the basis for this particular exemption, which piggybacks off of the state circuit breaker program. So anybody that's familiar with the state circuit breaker program, if their taxes exceed their adjusted gross income by greater than 10%, the state will give them X amount of dollars. I think that maximum benefit this year is maybe $1,180. If you applied for it, you receive that from the state, you can apply for a local exemption, and I call it the circuit breaker exemption, using a hardship. It's that we use the same form, and data to provide this exemption. And the average exemption, I think, over the last 4 or 5 years from the town, not including the state component of, say, $1,100, let's round it, $1,100, is about $2,600. So between the state and the town, you could mitigate about, $3,300, or no, what am I saying? My math's not working. About $3,800, $3,800. And people that take advantage of it year over year, but I do caution people too, because if your real estate taxes exceed your adjusted gross income by 10%, but then we give you an abatement the subsequent year, you may not be able to get it because you're less than the 10% now. So it is a little bit of a roller coaster ride, but the people that have been taking advantage of it are truly happy. I mean, if you can cut, $3,800 off your annual tax bill, it's been helping a lot of seniors and a lot of people stay in place.
Just another follow-up. Besides yourself, Brian, is there another dedicated resource that the public could come in to follow through on some of these tax strategies, real estate?
I mean, if there's any citizens out there that want to know more about these programs, I mean, I'm doing the presentation, but they can walk into town hall at any given time. My administrative assistant knows these programs really well. She can walk you through it. And I think one of the things that we do too is somebody may be interested in this program, not knowing about these others or fully understanding them, so we kind of sit down with them and triage them and say, well, let's go through some of this stuff. We paint a big picture for them and say, hey, we have all these different avenues you can take. Somebody might be getting a veteran's exemption for $800 a year. And I go, hey, listen, we have other programs out here, and maybe based on your income or your assets, you might be able to double that or triple that. And so we show them these other programs and said, you know what, Brian? I'm not gonna go down my veterans exemption path anymore because you can't double dip on some of these programs, but I'm gonna go over here because I'm gonna get more bang for my buck. And so Marty and I, my administrative assistant, we kind of guide and direct people where they can get the most bang for their buck, so to speak, Mike. But we try to do that with individuals. The more we know about them, the more guidance we can give. But again, it's completely private. These applications for exemptions are not open for public inspection. They're not available to anybody that wants to come in there. I won't even let the auditors see them. Yeah, so because it's important that the seniors realize that, because they don't like to disclose their financials, and so we hold it dear to us. And the actions that the Board of Assessors take are in executive session. It's not in a public meeting, and it does not get disclosed. I won't even mention their name at all, because I'm very sensitive about protecting their privacy.
Adam?
Thank you, Brian. Just a quick question to make sure that I'm understanding the Prop 2.5 correctly. So no matter what happens to the valuations of, say, a single-family home in the town of Acton, is it correct that that single-family home tax bill cannot rise by more than 2.5% year on year? That's not true. So you can be
No.
taxed up to 2.5% of the assessed value.
So
regardless
property
of
values
whether
are all based on market conditions, whatever that is, Adam. So if property values are raising 10%, your value is going up 10%. What Proposition 2.5 does, it controls the total spending of the town. So it controls town meeting spending, has nothing to do with property values. And so and one of the misnomers is it's not just 2.5, but it's 2.5% over the prior year's budget. But it's also, there's an allocation for new growth, new construction growth in that calculation. So just from a pure Proposition 2.5 perspective, it's 2.5 if you're taxing fully to the 2.5, extended 2.5, and any value that's associated with new growth. And that could be 0.5%, could be 1%, could be 2.5%. I mean, I've seen, depending on, we've had good years where that new growth calculation adds, 1.5%, 2% to 2.5. And it's all within the confines of Proposition 2.5. It's all meeting the legal requirements. So conceivably, with no other changes, your taxes go up 4.5%, but your value didn't go up at all because of 2.5, because you had 2.5 in Proposition 2.5, so 2.5 in the tax levy growth, and you had another, 2 or 2% in your new growth figure. So it's a very complex issue, and not a lot of people understand that, but it has nothing to do with your property values, because those are all market driven. You could, right now we're in a very dynamic market situation. There's a lot of stuff going on out there. So.
Well, I can say I've read the Prop 2.5 a couple times, and I could probably read it a dozen more, and we'll still find it confusing. But yeah, I understand that the town can raise by 2.5 and then add the growth on top of that. But it seems to me that the two main components of Prop 2.5, component number one is that real property cannot be taxed at higher than 2.5% of its value without an override, and that's not true. And then the second component, which seems to be stated,
it's a misnomer, and I think a lot of people. Trust me, I've been doing this for 30 years, and I get people at my counter all the time. And Brian, this is not even it isn't legal. I'm calling the State Department of Revenue. I mean, I hear it all the time. I do. Steve and I have dealt with several citizens that that have come in and they don't believe us. I'm all compliance. The state signs off on these. They're looking at my assessment sale ratios. They're seeing my changes in reports. Single-family homes are going up 8% or 10%. It's all compliance with it's just the total spending cannot increase by more than 2.5.
okay.
So, yeah.
So I'll be reading it again and again and again.
Yeah, I mean, we've had cases where you had single-family homes going up and you had the condominium market going down. I worked in, I've done this for years in other places where you had, second homes or where the real estate market starts collapsing and the second home values completely collapse. So they're going in down this way, but single-family homes are still keeping a steady pace. So there's a lot of stuff that can happen, but it's 2.5 just as you're spending.
Thank you for the clarification.
Isha? Dave? Did I skip you?
No, I didn't have any.
Oh, sorry. All right, go ahead. I was just on a roll. Go ahead, Christy.
I just want to make sure I'm thinking about this right. My understanding is that assessment just determines which portion of the pie is paid for by everyone. So everyone's values change, and it doesn't mean that your taxes don't necessarily go up if your assessment goes up, if the whole pie grows. It's just which.
Yeah, so it's fairly complex. So residential properties account for about 90% of the total levy, the tax levy. And within that, you're going to have all kinds of changes within those different segments. So even within the residential sector, you got a lot of moving parts in that, where you might have, you have condominiums, and condominiums may be growing at a whole different rate of speed than single-family homes or vice versa. And then you have the commercial sector, which is all kinds of properties. You've got retail, you've got commercial, you've got, combination of retail and office space. I say commercial office space, or even mixed use where you have some residential mixed in with it. So it's a very complex formula and model, and this is all being done with State Department of Revenue. So, and I'm not sure am I answering your question?
I think I asked it unclearly. I own some segment of the property value in the whole town. Right?
Yeah,
My house is,
no.
and it's a
Yeah,
tiny, tiny
it's a
segment.
fraction of the total.
But my assessment only matters relative to all the other values around me.
Yes, that's
So
correct.
if everyone else's gets bigger, my would get smaller. So it
If
doesn't matter.
everybody
what
else goes up and you don't, you're going to see a
So,
decrease in your
yeah,
bill.
which happened with my condo. I had a very nice tax decrease for a few years there. So it's not, to Adam's point, it's not so much what you value my house as what you value my house as compared to everything
In
else,
relationship to the rest of the,
which is why the commercial properties matter.
to the rest of the database, correct.
Thank you.
That is critical. Thank you.
You have a question? Okay. Isha?
So what is the split of single-family homes versus condominiums in Acton? And is there a differential increase in the valuations of?
I'm sorry, Isha, I'm having a hard time
sorry.
with your mask.
I said,
I got a bit of a,
what is the split between single-family homes and condos in Acton in terms
so
of
how much is-
percentages? Yeah,
so you're talking the relationship between like a single-family home and the condos?
right, like how many condos versus how many single-family homes?
So I have about just under 5,000 single-family homes, and I think the condos are just under 3,000. I probably have more condos in this community than any other community in the Commonwealth of Mass.
Really?
Yeah, I have like 130 complexes. That in and of itself is a challenge.
Right.
Yeah.
And
But yeah, so in the condo class continues to increase probably at a greater rate than as far as parcel counts than the single-family homes. If you look around, a lot of the stuff that's being built now, a lot of detached condos or even a lot of townhouse-type condos, but that seems to be the model
Right.
that we're seeing right now.
And in general, do the increases or decreases in property value for the two segments, do they march in lockstep or do they vary considerably?
Well, that's kind of interesting because single-family homes are just what they are, right? They're single-family homes, they're fee-based, they're fee-simple ownership. So they have a house and they have a plot of land that they sit on. Condominiums are a much greater variety because you have garden-style condominiums, they're basically apartments in the garden style. Then you have townhouse-style units, and then you have detached units, which look like single-family homes. And they may have exclusive use areas. And so that in and of itself is a lot more dynamic in and of itself than a single-family home. They all have different challenges. Again, it's depending on the market conditions and depending on a willing buyer and a willing seller and inventory and demand, that changes all the time, Isha, I think this year you're going to find that pretty close, I think, as far as valuation increases, the condo sector versus the single-family home. Once we see the final numbers, I think they pretty much step in step. So I hope I answered your question, yeah.
Hey, Brian, good to see you. Just one for me is, the different programs, exemptions, abatements, et cetera. What was the dollar amount on those? I think you said in the beginning.
What was the dollar
Do you
amount?
know, how do you calculate the dollar amount of that? Is it just the difference between what a traditional, taxpayer would pay versus the discount for an abatement or an exemption?
Yeah, so this chart here.
Yeah.
So in FY15, we granted about $300,000 in property tax exemptions. Now, exemptions are personal exemptions, not abatements. Abatements, reduction in value, and exemptions, a reduction in your tax obligation to the town. So in 15, it was about $300,000. In 20, it went to over $600,000, so we doubled it in 5 years. And last year was about the same, David.
And
So-
are exemptions and abatements the two most
This is just
commonly used?
pure exemptions.
Sure.
This is just pure reduction in your tax bill because of you, not because of your property value. So generally what happens with abatements, it's a reduction in your property tax value. Maybe I had data wrong, maybe it was something that was incorrect, and maybe you proved to the assessors, or I went to as far as even the appellate board in Boston, and I had a decision that said, grant this taxpayer a $1,000 reduction because we believe they were overassessed. So that's not in here. That's over and above this amount right here.
Sure, understood. Is there a cap on the exemptions? Is it just because I'm just thinking out loud, but like, it sounds like there's a lot of programs out there that would be helpful for seniors or people living on a fixed income, but there's naturally an offset for reducing spending in that amount.
So there's no cap on the total amount you can grant as far as exemptions. That's entirely up to the community. They all have different rules and criteria. The state sets certain parameters, and then there's a lot of local options where you can change those parameters by a vote at town meeting. We've done some of that in the past, but it's really entirely up to the town and the finance people and even the Board of Assessors and how much money they'd like to put aside for these programs. One of the things that we've actually kind of done internally, because it was kind of a pilot, when I talked about that circuit breaker program, which was the latest exemption that we put out in the street for our citizens, we originally put a $200,000 cap on that. We thought we were going to have a lot of people taking advantage of it. I think the max we've hit is about $75,000, $80,000. So there's still some room there, and I think even if we hit the $200,000, I don't think we're going to turn anybody away. So I think it's something we're going to have to look at and address going forward, because it's an expense. Obviously, it's a budget item, and we set aside this reserve for that. You know, I'll just leave it at that. But yeah, right now there's no cap, but going forward, we're going to have to certainly look at that. Not putting a cap on it, but what does it really mean?
Yeah,
So-
I'm just thinking out loud that
Yeah.
naturally for every dollar of tax revenue reduced is a dollar spending that should be reduced in theory.
Yeah, I mean, I know some communities, I think, will actually put a cap. This comes out of the overlay account, so it's a kind of a set-aside account for, for abatements and exemptions. And I think some communities will actually, and I'm not sure, if it's what we should be doing, but they might put a cap on it. They might say it's 1% of the total tax levy or 0.5% of the total tax levy, and that's the cap. The danger with that is if you go skying over that, because some of it's out of your control, you might grant all the money in exemptions, and then you realize that you have these outstanding liabilities over here because you don't know about them yet, because there's timing issues, and people might file for an abatement locally, but then they don't get relief or relief to the extent they were looking, and then they appeal it to the appellate board, and you have to have kind of some money in reserves to make sure you've got enough to cover that potential liability. And I'm probably getting into the weeds, but it's.
No, that's interesting. Thanks for that. And just maybe one quick follow-up along the same line is the abatements. And I know this is probably a tough area to quantify, but it sounds like someone could look for an abatement if they believe the property value is assessed too high or some other circumstance, et cetera. Do you have just a sense, or can you calculate those values? Are they like numbers, we thought we were going to get 12,000 and this person, made the argument for 10,000 and the board accepted that? Do you keep track of that, or is it just sort of such a long list of one-offs that it's really hard to do that?
Yeah, it's probably more of a one-off. So one of the things when we do this modeling, and again, you got to remember, I'm not a fee appraiser going out appraising each and every one of these properties with 2 or 3 comparable properties and saying here's your number. It's done on a model, and so when you have a willing buyer and willing seller, I'm a different willing buyer or I'm a different willing seller. And so all these transactions, you try to capture them as best you can. You have the one-offs, and so that's where you try to work with the taxpayer and the citizen and saying, well, why are you filing for abatement? Is it, oh, well, you got me down for 1,752 square feet, and it's 1,572. I think it's a typo. We'll confirm that data. Okay, that's easy. We fix that and we move on. And then there's some that frankly just don't believe that assessed value is correct. And so they have to approve to the Board of Assessors through some kind of analysis why it's off. And then the assessors will look at that data and make a decision based on the information that's been submitted. In some cases, we come to a lockup where we can't really agree, and then that gets appealed to the appellate board. And what they do is, I'm not always, they have their own determination, and sometimes you have one commissioner, and then they'll have to bring it back to committee, and then the committee will decide ultimately the outcome of that hearing and the final numbers. So a lot of it is really one-offs.
Sure.
Yeah,
Great, thank you.
Good, Roland?
So to get back to the condo figure, 3,000, units. That includes the units that are detached units, like up in Narrow Park area, there's a bunch of those all around up there. Robbins Brook is another one.
All of that,
They're all part of that 3,000.
yeah.
And so
Yeah.
does the condo. Do you see within that the valuations, the assessments, or the selling price, whatever you want to use for a metric, is different with the detached versus the garden style? I mean, obviously, the garden style is not going to sell for what a detached is going to sell for. But do you see a difference in variation within those different parts of those different types within the condos?
Yeah, so, the condo market is a lot more dynamic, I think, in many cases as a real estate market. So I think one thing when you consider the condo market versus a single-family home, what do they always say? Location, location, location. The condo market's very similar, especially in the garden-style units. So you have a lot of garden-style units, but again, it's where is it located? But then where is it located in the complex itself? So when you have garden-style units, is it on the base floor, which is partially below grade? Or is it on the upper floor or the middle floor? All those things generally have a bearing on it. So it's another layer of complexity, I guess, when you're going out and assess it. And then even from a garden-style complex to a garden-style complex, even though they may be similar in size and square footage and same functionality, depending on the amenities in one unit versus the amenities in the other unit, and a lot of it, and I think it's important, and this is just the way the market behaves, is you got to look at the financials of the condominium as well. So, as far as reserves for replacement, and because that's going to impact your decision some point down the line, whether you get a capital assessment or not, because you need new roofs or you need a new septic system. So just like buying a house, you want to do all your due diligence. And I think that all takes place, but it's on a whole different level, Roland, so it's fairly complex.
Jason, you have any questions? Go ahead.
Yes, I do. Brian, in the past we've discussed about the cyclicality of the housing market as in town as it relates to when kids graduate from the ARSD and move on to college and families move out. That was definitely disrupted during the great housing bubble of 2008, 2009. Do you feel that a fair chunk of this, actually the first question is, do you feel that there is a more rapid turnover of the housing stock in town, or are you seeing more sales than you've seen for the last couple of years? Or are you only seeing that the value of the sale is increased? What I'm trying to get at here is this a standard peak in the number of houses being sold as part of the cyclicality of housing turnover, or is this just a rampant symptom of inflation? Do you understand what I'm getting at?
I think so, Jason. So if I understood your question correctly, are we seeing more sales today than we have in the past, typically? Or is it just a matter of the sales are just selling at a much higher price than what we've seen in the past? And I think, it's probably the latter. So I don't think the number of sales has dramatically changed. So if you're talking turnovers, I don't think we're seeing a lot of change in the actual turnovers of real estate. I think it tends to be more in the actual selling price of the real estate, which seems to be higher. I think one of the things that's driving that is because of the lack of inventory. So over the last, several years, I think historically we've just seen lower numbers than sometimes that we've seen in the past. Again, I'm just kind of doing this from memory and just looking at this data. I'm sure that information's available out there as I submit that to the State Department of Revenue. But off the top of my head, I think it's the latter. I think we're just finding a greater movement in the price and not the amount of sales.
Well, it's up to us to determine if that's just a straight inflationary root cause, or if it is a mix of inflation and lack of inventory. So I guess I'm just trying to decide if we need to worry about a new glut of school-aged children coming into town, or if not. If this is not an unusually
Yeah, I think it's, again, I think it's the latter. I don't think we're seeing a big increase in the number of sales. I think, if you talk to local real estate brokers, they'll tell you that there's a need for more inventory out there, and that, there's a lack of inventory, which is driving up some of these prices. Hence, some of the bidding wars on some of these properties. They put it in MLS, and it actually closes for 15 or 20% higher than what they were asking. So a lot of that is, demand and lack of supply, I think is part of the factor, and not, not more offerings on the market.
Okay.
And
It's not necessarily a bad thing as a homeowner. It's not necessarily a bad thing if the resource constraints are properly resulting in increase of house values. I understand the fixed income argument, but a rising tide raises all boats. Thank you.
Any other questions for Brian? Great. Thank you so much for that presentation.
Thank you.
We have a member of the audience who has a question. I'll open it up. Could you just, I don't have a microphone. Do you think you could actually speak into this microphone here and, and give your, we need your name and where you live. Yeah, can you hit the button? Thank you. That way anybody who's watching from home can hear you.
Oh, I didn't know you could watch from home.
Yes, sorry, yes, you can. I know.
I live in an over 55 community of mixed housing.
Okay, can you just give us your name real quick?
I'm sorry?
Your name, please?
Myra Torrey.
Myra, thank you. I'm so sorry I missed it before.
Oh, that's
Thank you, Myra.
okay.
Go ahead.
Mixed, single family and double families.
Okay.
And is a consideration made, a distinction made between those two types of property within the single community? That was number one. And number two, the interiors of a lot of these homes can be added to basements finished, porches enclosed. Is any of that recognized as far as the value of the individual property is concerned?
Brian, do you mind taking a stab at that? Oh, that's okay. So if I understand correctly, what she's asking is that there's a lot of variability in mixed-use property as far as, enclosed porches
Right.
and
Finished basements.
finished basements.
Single family versus two attached units. Do you differentiate, or is it just kind of
No, we do.
comparables?
We report them out separately to the State Department of Revenue, so, I can't compare a single-family home to a two-family home, if that's what you're saying.
Well, it's
There is a
two attached units.
Yeah, well, and then you have single-family homes with what they call kind of an accessory apartment, which to me, we still look at it as a single-family home and a second use, which might be sharing some of the same utilities and so on and so forth, where not a separate independent apartment. That's a little different, and I'm not sure if that's what you were talking about.
No, these are two units, independent utilities, just stuck together.
Let me see if I can help. So if you live in a duplex or whatever you want to call it, and one half has a finished basement, one half doesn't, you're asking, is that go into the assessment? Well,
Correct.
Only if the person who finished the basement pulled the proper permits
Okay.
to do so. So
Okay.
that's how Brian would find out that half of the duplex is more upgraded than the other half. So
Okay.
if you want to redo your kitchen, you should pull permit. That's pretty much the way you track
But
the differential value between two otherwise identical units.
But the single-family units are assessed differently than the attached units.
Correct.
Okay, that's number one. Number two, how do I see what you're looking at when you have assessed my home? As far as square footage, number of bathrooms, that type of thing?
Absolutely. So square footage, location of the property, age of the property, condition of the property.
But where can I see
Brian?
that?
Brian? talk to the microphone, and everybody out in TV land probably is asking the same question.
Great question, and I think it's important that everybody looks at this and reviews it. So on the town's website, we have GIS mapping, and under GIS mapping is a feature in there where you can do a lookup. You can look up by name, you can look up by street address or parcel ID if you know it. If you click on that, it'll pull up your particular property, and there'll be
I think I tried that.
Well,
I didn't
you
see
come
my-
in, and I'm going to walk you through it.
I will do that.
You come in and see me, and I'm going to walk you right through it, and I'm going to show you right where to go. And then you can
Okay.
show your neighbors, because I
Okay.
want people looking at this data. And I think it's important that people understand where to look, understand how to read the data, and to make sure that it's accurate. And so right in there, you can click on your property record card, and it's going to pull up an actual property record card with all that structural data, and they'll give you a number of bedrooms, your bathrooms, your heating system, the square footage.
You'll have to show me. I
You
tried, I
You
did.
come in and see me, and I'm going to show you right where you can find that information.
Well, thank you so much.
Alrighty.
Thank you. And just for clarification, you can watch our meetings online on YouTube TV, but you can't participate. So you were right to come in and ask your questions in person, and thank you for attending. All right. For a number of reasons, we are going to postpone the Stabilization Fund policy to our next meeting. I appreciate everybody who did extensive homework, and this just gives us a little more time to do even more extensive homework. We're going to move on to the point of view. And so I'm going to let Mr. Majors go ahead and take this discussion away.
Okay. Excuse me. We'll go through the latest version. There's still work to be done. I'm finding some of the information is kind of I wouldn't say inconsistent, but there's various sources for like budget data, and so the numbers sometimes are confusing. But budget data that we used in this report are from our latest ALG document, so hopefully it's right. Now, I noticed on the first slide, there's an error. It's FY22, not FY23, on the title page. That's correct, right?
No, but it says FY23.
I mean, it should be FY22.
Nope,
23 is
23?
23.
Okay, 23 is correct. Okay.
We already put money aside for 22, hopefully.
There's no changes to the second page, the economically, our town. I think we all went through that. Financially, there's no change. Reserves at 6.2 million. ARPA recommendations have not changed. Tax burden has not changed. Those numbers are all updated. The demographics, I still don't have data there. I don't know if it's Eva, but
Go ahead, Christine.
Eva is the one who will get you this information. I'd also was thinking about this one. I'd be very curious to know the percentage of households with, the head of household is 65 or older. Get a concept
Okay.
of how much of the town, the revenue is paid for, or the demographics of the town, rather, are by retirees or people who could theoretically be
Sure.
retired. I just picked 65 as the cutoff for that.
well, I'll pay,
What's the official? Is it 65 and a half? Or are we up to 67 and a half now? Or is it 69?
Depends on when you were born. So, I mean, you could have somebody who's 71 years old still working,
yeah, I
you know,
think,
so, I
But
mean,
that's the same for households with children. I mean, you just have to pick a line.
there could be several charts on here that would be very interesting for the town. We are culturally and fiscally diverse, so I think their chart should reflect that in some manner.
Census data should be available. You can do it by zip code.
So for the town, it's very hard to, you're only getting census projections, but John Mangiarotti was able to get me these numbers for the last 2-3 years in a row, probably through Eva, for specific Acton census information. which I wasn't able to find online.
If everybody fills it out.
You don't get to vote if you don't fill it out. I learned the hard way.
Have you seen our voter turnout?
Okay, the next slide, the town spending these, oh geez, no, your copy looks different than my copy.
This is what you attached in the email to me earlier
Yeah,
today?
and then I printed it, and it looks, but anyway, these numbers are correct. The school budget,
Yeah, I don't have it either.
The word, where it says school budget, there's a word under that where the 1 and 1%.
yeah, they're, I think,
That's going to be
that
readjusted.
might have been an old, that somehow that didn't get formatted. That's,
Yeah, it's got a formatting issue.
Okay, we don't have the printout of it
Right.
either, so
you don't have a printout?
we'll take your word for it.
Yeah, the printer downstairs, I have a complaint for the chairman of the board of selectmen, the select board, that their copier eats some pages. Now, what's going to be done about it?
All right,
But anyway, the budget numbers are from the ALG plan.
great. What I can see of Mike's graphs, they actually look really clean, and I look forward to seeing them. Look good.
Yeah, somehow I printed a whole bunch of copies, and a page was missing.
Yeah, there are 2 pages missing, Mike.
Yeah, it's, well, one which is 2 pages. It's page,
Okay, so both of these graphs are not right. Mike has the
Yeah,
right
they are
graphs,
right.
and he will
They-
email them to us.
yeah. Then the revenue, actually, that didn't print. I don't know why it looked,
Now, yours looks much better than what
Yeah.
you emailed me.
That's the email we got at 6 o'clock today? Is that what was in it?
Yes,
It could just be a formatting.
so,
It's-
yeah, it's,
That's,
I'm just using a preview. I didn't even open it in and out.
yeah, you're
But-
right. This is different.
this is, so anyway, I spent a lot of time cleaning up that chart, and it's,
Excellent.
I think it looks pretty cool.
Yeah,
It's really nice on the
it
sheet.
does look really nice on the sheet. You'll just have to take our word for it, and,
Pass that around.
Those municipal sources for FY '22, they're all the correct numbers. I went over with Steve,
great.
Mr. Barrett, and Brian.
Is that the one we have in here?
Oh, yeah, no, it looks good on Eva's iPad. It's just not translating well to my, Isha's iPad. I
Well, I
apologize. I
think-
called you Eva.
Keep going back.
It's just not rendering well on my screen.
Right.
Back down.
Okay.
Goes back to the mic.
As long as the numbers are updated, then I'm
Right.
great with that. Debt
We haven't
service.
done anything with that chart.
Yes, Christie.
Is this all excluded debt? Or
I
does the
believe
town
so,
other
yes.
include non-excluded debt?
I think this is all excluded debt. Yeah,
Okay, I think we should make that clear. This is not the entirety of the town's debt.
No, it's just selected, those,
But if you say debt service without,
well,
Knowing that,
those 2, 4, 6 items there.
I think it should say excluded debt service.
I think,
I don't
there
know
should be
what's
a-
included in town other, if that's everything else.
Someone just said, I thought that it was excluded.
Town others probably the,
it's in the speaker's notes.
Okay. I just think there's an implication here that this is all of the debt that the town has, and that is not in fact the case.
Yeah, I feel like we have this discussion every year, and I'm not sure what the right answer is.
Or I
Yes.
might have a session with
It is
that.
important to be clear.
It is important to be clear, and I think, if I remember correctly, it's in the speaker's notes that this is
Okay.
a specific debt that we're paying over and above 2.5%, prep 2.5%, whereas
Yeah,
the rest of the debt service we're paying for within the budget.
Speaker's notes,
So this is the excluded debt slide.
Yes, well, we could just write that. But it's not the debt, it's the debt service.
But it's the excluded debt service. I think that's important because we talk
Sure.
about debt exclusions specifically.
So if we can fit it in the title, we'll change it to
I'll
excluded debt service.
add that.
awesome.
And we were going to make it 15 years or something to that.
Well, I don't have the data that goes past there. It's just-
Oh, I see.
That's why I was going to do that, and then I'd have to sort of fake the numbers. Because the numbers only go to far, I can just drop them down and assuming they all go on for another 10 years, but
But, I mean,
Somebody has those.
shouldn't whoever
Looking
give
at-
you those
looking at Mr.
numbers
Barrett.
have them?
right.
Mr. Barrett, we get these numbers from you. Do you ever project out farther than 2028?
Well, thank you, Madam Chair. As you know, we went out to the bond market in March for some lengthy debt, so we do have debt service going out for a little bit. So if we need to work with the FinCom to kind of QC this chart and do a little better, then we'll have another appointment with Mike, and we'll, and Roland.
Next Tuesday night works good.
Next Tuesday night would be perfect. We'll work on this chart with them and clean it up.
Fantastic, thank you.
Same time, 5 o'clock, 5:10.
You meeting in an office or at True West?
I need time to commute from my house.
All right.
That- Yeah, I don't know why that's printing like that.
It-
'Cause
You didn't get the odds of even numbered pages.
Well, in the original, in the packet that I had printed, I had every page, but what came out of the printer
Yeah.
was not every page.
And the formatting is clearly cleaner on the printout than what I'm displaying, but we can go ahead and remove the italics on those numbers if they're,
Right.
Yeah.
We're working on the speaker's notes as well.
oh, very
There's a chart
nice.
that I updated, the free cash.
I like that slide. How does it look for you?
Doesn't look anything like that.
It's not even the same color.
Yeah,
So Mike, they're seeing
this is what it looks like here on the one you sent out.
Let's-
Well, I think,
That one looks right.
But what you've got there looks,
I'll print it as a PDF, and that way, you don't worry about those formatting issues.
but this is very readable. It should print well, even in black and white.
I'm sorry, I'm missing something. Where's the percentage of the certified budget?
Actually, on the bottom of that is a table. On the bottom of mine.
Oh, yeah, Mike's printout has a table. I don't know why my
Total
display
budget,
does not, but right in this section,
No, but
Can you see it? Or you can't see it on yours?
I think what happened is when you said, someone said that I didn't include the attachment, I might have
Jason, if you pull up an email from Mike,
filed from today.
you should be able to open this document and see hopefully what he
But
sent us.
there's a table on the
including a
bottom
table.
that has
that's what he said.
the budget,
Your table's missing too.
the free cash and the percentage.
Okay, so we'll get PDFs out at the end of this, or,
Right.
within the next 24 hours so everybody can see what Mike sees,
Yeah.
which,
Jason, I'm holding the one Mike has, and it shows the percentage of free cash as a percentage of the budget.
Sounds good.
okay.
The formatting is crazy on that, but there's no changes to that. That's been updated.
Okay, and your printed version fits better on
Yeah.
the page?
Looks nice and clean.
It does.
There we added some, actually, economic uncertainty. We didn't add anything on that page, but we might want to. I think I'm open to suggestions.
Where do we address the health insurance trust increase?
On the next
Okay,
slide.
as long as it's in there. Oh, that's right, it would be under our people. Does anybody have any comments on this one at this time?
Want everybody to look at it and get back to me.
Yep. Yes, Christie?
It says we need to create a detailed expense forecast for fiscal year '23 to '25, and we're talking about fiscal year '23?
24 to 26? And there's an extra space between detailed and expense.
Or would you say the next 5 years?
Yeah, yeah. That way it'll carry forward nicely to future
Right.
presentations.
And then for the third bullet point,
Which one?
The third
the
one?
third one, it just, so what are we going to do if we identify services that are redundant? So,
Well, hopefully eliminate the redundancy.
so maybe we should say identify and eliminate redundancy in services, or
Yeah.
something like that?
Some services might, some departments might overlap, some services might overlap.
Yeah, so I think we should kind of see what the strategy is instead of just saying identify.
Is this something that we've identified as a potential problem?
Well, I think it's more directed to the town manager's office, at a higher level.
Okay.
Lots of departments, lots of budgets. There's got to be some redundancies there.
All right, so identify and eliminate redundant services.
Yeah.
There you go.
Or, yeah, eliminate, change it to eliminate redundant services. It's no change from our last session.
Okay.
There's no change in that one.
All right. This fits better on your printout,
Yeah.
and that hasn't changed.
OPEB hasn't changed.
When do we get the 2021 liability numbers? Is it not till the end of the year, or is it sooner?
It's every 2 years that we do a full actuarial report.
Okay.
And we just got one. So it will be way off.
So we'll stick with the 2020 number?
Yeah.
Okay, and this has been our recommendation for many years.
Right? Future capital projects. Actually, just today, I took a list, some items that were in the town manager's sort of wish list, and I just put them there in lieu of anything else, just as a discussion point. I don't know what, you got to identify capital projects that are in the next 3 to 5 years, or 1 year, the short term and the long term.
Is the Kelly's Corner right-of-way acquisition cost outside of the Kelly's Corner infrastructure project? Is it not already funded?
It might be.
I feel like it should be.
Yeah, some of them had already been taken care of, and I just try to include some that might be worth talking about. In lieu of,
Did we get any
what's that?
Did we get any clarification on the capital improvement plan that met 2 weeks ago that we were not part of?
Yes, we got clarification that that was not a thing, and that there will be a joint presentation of the capital improvement plan to the joint select board and finance committee coming up.
Monday, right?
Monday.
So is the capital improvement committee that met 2 weeks ago?
There is no capital improvement committee. It is
I just
just,
saw one person in,
it is part of the standard budgetary process.
So what was that meeting 2 weeks ago?
There was no meeting 2 weeks ago.
Sure.
It was a misunderstanding. So I guess, do we want to keep things on here that are already approved and funded? Or do we want our concerns to be future capital projects that
I
have
think
not yet been funded?
I'd keep it future.
So then I guess I would remove the Kelly's Corner right-of-way acquisition cost, because I feel like it's already funded. The design for removal of River Street Dam,
I thought we,
Steve, do you happen to know if that's, Mr. Barrett, do you happen to know if that's fully funded, or is it just partially funded?
I don't, Madam Chair, I would point out that next Monday night, the town manager will be releasing the capital program, so I think, depending on the wishes of the committee, we could take something from that final document that comes out Monday night and use some of those highlights to put in that slide, if so be it.
This will be updated then after
Okay.
next Monday.
That's a really good idea. That's perfect. That will be fresh information. All right.
And this was our strategy statement towards addressing capital projects, and it hasn't changed.
Yes.
There's no change to the reserve,
Yes, Isha, go ahead.
except the
so
XXX.
for the first sub-bullet, so is ARPA meant to be in the parentheses or without? Should it be outside it? It's kind of nitpicky, but.
Say that again?
Is ARPA supposed to be in the parentheses or outside it? You think it should be in the parentheses?
No, I think you can remove the parentheses around ARPA. They can just say ARPA funds, grants, et cetera,
Yeah,
without the parentheses there.
okay, thanks.
Okay.
Okay.
Reserve policy, I think we talked about. Yeah, the formatting is cleaned up from, I don't know.
Yeah, no, it looks,
Right.
I can see that it looks fine on your
Although
printout.
where it says FY '23, no more than XXX.
Yes, so we still need to plug this number in based on our policy.
There, I think we could add some meat to that, if anyone has some suggestions, other than a one-liner. Basically, it says, we don't buy anything we don't have a use, we don't have a clear and stated purpose for.
Yeah, go ahead,
Maybe
Christie.
that's enough.
We've run into problems in part with the land purchases by buying things that had real problems. I'm thinking the River Street Dam or the Main Street property that it ends up you can't actually do a whole lot with. So I think it's not just having a purpose, but maybe vetting the properties more. It's some way doing some analysis. I would hope some of this could be seen not just in hindsight.
Right. If you want to submit some additional language, I'd love to see it.
I wonder if it's also worth putting in some language about knowing how we're going to fund whatever we're going to do with that property,
That's true.
or at least have some ideas about it, rather than saying, we'll get to it when we get to it kind of thing.
Agreed.
Well, you can submit your comment.
You send them a
We'll include
one-liner.
Okay, yeah.
That would be great. No, I agree. I think that's,
Takeaways, we added some items. The
okay.
next, it says, it's, this period of economic uncertainty may linger a while. The next line I added, that labor and supply chain issues are problematic, and businesses must use innovative solutions to stay competitive. And that's also going to linger.
You have supply chain issues in here kind of twice, so I think either on the second bullet or the fourth, but it probably doesn't need to be in both.
Well, one is just directed towards businesses, and the other affects the consumer as well.
Okay.
Tax bills have gone up. $600 a year for the last 3 years, that's a concern. Inflation, this is, we haven't talked about inflation in the past, and it's rearing its ugly head, and that could linger, and could be a problem. It devalues your paycheck, you get less for your dollar, makes everyone poorer.
Steve?
Yeah, the important thing to say about inflation in this scenario is that there's no indexing Proposition 2.5 for inflation.
Right.
So if we wind up in a 5% a year cost increase model, we still have a 2.5% per year in revenue model. So things will only get worse.
Dave?
I think in the past on this slide, we've been even more specific with the statement that salaries salaries and benefits have increased at 4% a year for whatever amount of years, and we are limited to 2.5% or something to that effect. I always think that's been one key takeaway that is nicely quantifiable and just a message that should be consistent as we've got to stay on top of those numbers.
Can you write something down and send it?
You can just catch everything I said?
We'll just start the salaries.
I'll talk slower. I'll send you a little bit of verbiage on that. But I think it's been in the past editions of this deck, but I'll send it over.
So
But these takeaways, we could add 2 pages of issues. Maybe we should.
I guess one thing I generally don't like to see is more higher level stuff. It's better if it's quantified. Like the $600 per year is really good because that's something people could easily get their arms around. But saying inflation and supply issues are a major concern is very squishy and it's just hard to relate to that, I guess. It's yeah, I agree with you. There could always be a lot of takeaways, but we don't want to dilute the message too much with a lot of stuff in there.
Dave, so maybe I'm not understanding this correctly, but then does that mean that every year we're having basically a 1.5% gap because of the difference between what we're paying in salaries versus the Prop 2.5 limit?
In theory, as Brian, I think, explained part of, is that there's new growth and so on that makes the number a little bit bigger. But in theory, that's true. But I think the bigger message is that growth crowds out a lot of other potential spending opportunities that are there because it just continues at such a rapid pace.
Mm-hmm. Thanks.
Since we, go ahead, Roland.
The last bullet on this, Finance Committee does not support an override. I would say it does not support an operating override, an operating budget override. So we kind of quantify that.
Okay.
I don't know how to, it's what Dave wordsmith the other part of that he was talking about.
Christy?
I agree with the idea of clarity in general. Given that we're not talking about a different kind of override right now, and people won't necessarily understand a ton of this, I'm inclined towards keeping the simple, just saying an override.
Or a budget override?
Yeah, I like budget override. Would that be okay?
Yeah, I think that's fine. I just don't mean, because we look at it, and you fund the new fire station in the schools, those are an override, right? It's a debt exclusion override, but it's a debt exclusion, you're voting for the debt exclusion. I just don't want to have to, none of us want to, is have to go to town meeting and then go to the polls to authorize an override to meet our budget. So I guess, yeah, so budgetary, budget override is fine.
And getting back to that second bullet, I don't think it's squishy at all. And I think because of labor and supply chain issues, it affects, the way you go to a restaurant, getting service. It affects what you'll be buying at Christmas. It affects, when you go to the supermarket today and you can't find barbecue sauce or things of that nature, it affects everyone in a pocketbook. And people have been changing their, the way they live because of these supply chain issues.
But, Mike, oh, sorry, Christine. Go ahead.
Go ahead, Christine.
I would be inclined to take that second bullet point and combine it with the inflation one further down and say inflation, comma, labor, comma, and supply chain
Okay,
issues
we can do that.
are a major concern. Because I agree, I mean, you go to the supermarket and the shelves are not full like we're used to them being, and, I mean, it's a small thing, but I can't get the chicken fingers my kids are used to eating for the last 10 years. There is a lot of change like that.
Although, I mean, the one thing I have to say about that is it's not unique to Acton. It's pretty much across the board, across the country. So I don't know that we have to necessarily point it out.
It's putting everything in a bigger picture.
Right, but there's nothing we can do about it. So
Well,
if
we're saying this is why,
takeaways,
this is
you know.
why the select board and the town, et cetera, need to be more conservative with spending than they might otherwise be inclined to. These are issues that we see as a real cause for
Yeah,
reasonable
it
debt.
affects the bottom line, it affects your pocketbook,
Yeah.
it affects the way you live your life. So I think it does belong in there. It does affect the town of Acton and every citizen in Acton.
Okay, but you're probably right. I was going to also say maybe condense 2 and 4 together, since they're sort of
We can do that.
along the same lines.
All right, I'm going to take a quick tangent and say, since we brought up inflation, just listening to news reports, I hear some people say it's transitory and some people say they're indicators it's not transitory, and I'm wondering what the brighter minds on this board feel as far as the current inflation issue.
I'll take a stab at that first, and I'll let anybody else chime in on that. You're seeing, if you look at like oil, natural gas, you've seen those increase quite a bit lately. I think in the last couple of months, it's been like $30 a barrel for oil. Today, it topped 84. It's a real concern. You know, it's going to impact the town budget because fuel's going to cost more. Then who knows what we're going to end up for the winter. If we end up with a bad snow and ice season, that's definitely going to have a big impact on it. Natural gas going up. You know, a lot of the homes in this town and surrounding communities are heated with natural gas and oil. And with that increasing, it's going to impact people's budget. It's going to, and it's, the rate that it's gone up is more than 3 or 4%. It's 10%. It's, I think they said in some cases, natural gas was 30% increase over last year. So I guess it's turn on the heat in town hall and all our buildings and our homes and wear more sweaters. That's the reality that we're all going to be facing this winter. And that's going to also have a big impact on our seniors in town. So my concern is that we're going to see that in other inflationary costs, anything being delivered. Food prices are going to go up again too because it's going to cost more for the farmers to, with their crops and everything else, and it's going to cost more to get delivery, to get those products to the shelves. You have to back up at the ports too. It's all a trickle down. So yeah, inflation, I think it's going to go even higher than what it is now.
How long do you think it'll stay high?
I'm hoping not long. I mean, they're talking supply chain right now. They're talking out well into 23 at this point, and that's calendar year, not fiscal year. And if that continues this year, next year, I mean, hopefully it would abate a little bit after that. They are talking about releasing fuel from the Strategic Petroleum Reserve, or releasing oil to help bring the cost down, but at some point, they can do that, but then at some point they're going to restock it again. And what's the cost to do that? So
Okay.
If I had a crystal ball, I think we're going to be in this for at least maybe through '23 and maybe into early '24 at this rate.
Okay. Any other takes? Steve?
Not that different, but classic definition of inflation is too many dollars chasing too few goods and services. Everywhere I go, I see signs that say they're hiring. Everybody's hiring, or everybody has openings. Maybe nobody's hiring. So it seems like until there's more labor available, then you're going to still have some inflation. The way you get more people back into the labor market is to probably have higher wages, which contributes to inflation. So I don't see it ending. It's not transitory. When they get all the stuff off the ships on the West Coast, we'll still have a problem.
Yeah, examples like the Asian market on 2A still was not open because the owner says he can't get employees. It's ready to go, it's got its permits, and he still is not open because he doesn't have employees. I don't know if that's just not paying a fair wage or what, but there's a resource there that we don't have access to because it's not open, and it's not open because you can't get employees.
That surprises me just because I know some people who their teenager was set to work there on the scheduled start date and then they didn't open. I wondered if it was more of a supply chain of getting their goods there.
Well, apparently people talk to the owner to find out what the story is that issues with permits, issues with the town, supply chain. Now, he said, at least as far as I know, he said employees.
Okay. Christy, did you want to say anything about?
Roland mentioned a little about supply chain. I mean, yeah, anecdotally, it was going to be a 3-week wait for me to get a plumber to fix a leak in my basement. It's just, and they said they can't hire people. It's the same with my auto mechanic. They have had openings. They can't hire anyone. In terms of supply chain, that's going to take a while to shake out, and we're seeing that in it's hard to get Christmas gifts and a bunch of other things right now, and that's not, it has been caused by COVID, but it's not going to be fixed when COVID is fixed. You're running into just issues of, there are a lot of ships trying to bring things over and there isn't enough room at the docks, but it doesn't make sense to build out the docks because this is a short-term problem, so you've got the whole backup on the highway because of the one accident, and it's just going to take, I think, easily into '23 to get all of that sorted out, assuming there aren't other factory shutdowns from COVID and other things.
All right. That's a lot for the town to keep in mind. Okay, so we're getting to the point where if we don't complete this document and get it presented, it's going to be irrelevant for the budget process. So I would like everybody to be prepared for a long meeting next time to make sure we go through everything and try to finalize all the language. Mike, if you could get us going on the speaker's notes, get them to us in time so that we could review them before the next meeting, that would be great. We can make edits directly back to you as long as they're just to you. So if Mike sends them out and we read them and you have thoughts and edits, please send them directly to Mike so that he can actually work on them before our next meeting, because I'd like to not be here all night long.
Actually, even though it prints weird. And I think one of the issues is you might have different versions of PowerPoint that may not be compatible. And if you open up the PowerPoint document, you'll see that the speaker's notes, at least what we have so far. Some have not been edited, others have been updated. And
Okay, great.
but
So
if you want to submit stuff, please do so.
then everybody has access to those. So your homework is to get some edits to Mike, and then we can go through them and try to finalize this at our very next meeting. All right. I will take any liaison reports. Roland, anything? Dave? No? Isha?
So this, Okay, so the school committee met last week, and I unfortunately couldn't attend it, but I did review the recording of the meeting. The one pertinent agenda item was an update of, particularly for the first quarter for financial year 2022. That was given by the Director of Finance, Mr. Verdolino. And so he did make the point that even though typically it's very kind of too early sometimes to project what would happen for the rest of the school year, they are projecting small variance or surplus of $200K for the year end. So there are significant positive and negative variances throughout the budget, but most of them have canceled each other out. And so you have the small surplus. Now, a lot of it is subject to some assumptions that have been made in those projections. But I think overall, it looks like there is a small, about a $16,000 projected expenditure variance, and then there is a small projected revenue variance as well of roughly about $185K. So that adds up to a little over $200K.
Great, thank you. Adam, ALG report?
Given.
Did we cover it all?
I was thinking maybe the only thing we didn't really cover was the schools mentioning, this is not financially related, but maybe interesting, the program to have vaccination program in the school for 12 and under. That was the only other item I think that we kind of left out.
Okay. Mike, anything from the?
Well, it's not an official subcommittee. I want to thank the select board for voting to officially change the name of the Community Way, No Name Way, to Carroll Spinney Way once the property gets turned over, once the road gets turned over to the town of Acton. They did that last Monday. So thank you. And I think it's, the town will greatly benefit from that in more ways than you can imagine.
Christy, Steve?
I just wanted to make a comment on the ALG spreadsheet, which was not updated from last town meeting. And I know it's not our custom to do a whole lot of heavy lifting on the ALG spreadsheet until budgets are done. But in historic times or prehistoric times, if there was consideration of potential override, no matter how remote, there used to be a rule at ALG that you had to make that decision in October. And the fact that it shows a $900 and something thousand deficit, and we know every reason to believe that the health insurance number will be much higher than that. We'll add another $1 million to that deficit. How you solve a $2 million deficit is much different than how you try and solve a $900,000 deficit, and specifically in relation to our free cash policy. I think $900,000 we could have covered. $2 million we can't. So I think it's a good idea. I'm all for getting all the details right and getting all the numbers in, but sometimes you have to update your numbers a little earlier than we're in the habit of doing so. Now, if you're not going to have an override, that's fine, but then that means you're going to have to stay within 3% cost increases and stay within the free cash policy, and I'm not sure how that's going to get done.
Thank you. Jason, do you have anything?
next school building committee meeting tomorrow night. I should have something for the committee after that.
Okay. Excellent. I'll just quickly say that it was noted from Finance at our ALG meeting that all of our revenues are on target. The only thing that's down slightly is interest income, but everything else looks good. Be prepared for a lengthy meeting, lengthy discussion on POV so that we can finalize it at our next meeting. And Isha, I will entertain a motion.
I move that we adjourn the meeting.
We need to do a roll call vote. I will start with you, Roland.
Aye.
Dave. Isha.
Aye.
Jason.
Aye.
Adam.
Aye.
Mike.
Aye.
Christie. Aye. Steve.
Aye.
And me, I say aye. Thank you all and have a good night. Jason, safe travels.